Now, with another big night on Wall Street, helping the local market head in the right direction for investors, the big questions are, should we go long on resource stocks right now? Is the dividend play over? And what small cap companies are good value after being neglected for the biggies? To answer all these questions, we have Michael Heffernan from Lonsec Securities. How are you, mate?
Hello, Peter. How are you?
Oh, great. Did you hear my introduction to you, the ageless stockbroker I called you?
Yes, indeed, Peter. I heard that, but I'm not quite sure what my response is.
Well, I guess...
I'm still alive.
It could be a compliment. Now, mate, why I want you on the program tonight was that last week, surprise, surprise, Roger and I had a disagreement on BHP. And, you know, and Roger says, well, it could really fall a lot more from here. And I'm sort of pondering whether it's a buy around these levels or a bit lower. He said it could fall into the teens. Do you think that's a possibility?
Quick answer, no. I think that, you know, with BHP and with Rio for that matter, I think it all depends on whether you're a medium-term investor that's out over 1 year or whether you're in it for a bit of a trade, Peter. And my view is that I'm not a fan of the resources stocks, not a fan of BHP, nor Rio for that matter. But I do note that Woodside have put a lot of pressure on them to boost the dividends, so you could look at BHP in the short term as being a bit of a trading punt, if you like. But for a medium-term investor, there are plenty of other options about the place that are much less risky, in my view, than BHP and Rio in the medium term.
Okay, well, you're an economist as well. You've got many hats you wear there, Hefo. Why are you negative on BHP and Rio? Is it a China view?
Look, look, the resources, stocks and what we dig out of the ground depend very much on what world economic growth is. Now, as we all know, Europe is struggling, America is starting to improve a bit, and China, well, you know, as far as, to use an athletics term is concerned, they're well off their PB, or personal best. Their growth rate a couple of years ago was 10, 11, 12%. What is it now? Well, 7, 8, 6%, something like that. So when you look at the world economies, you'd say the demand is not great for the things that we dig out of the ground. And it's for that reason that I'm not keen on either BHP or Rio, believing that the market offers plenty of other options where you could do a lot better over the next year than you can with BHP and Rio. All
right, mate. So, all right, you've ruled them out, and I hope you're wrong. I hope you're wrong.
Can I just add, Peter? Look, I haven't ruled them out for the very short term, because I think people might buy it for the dividend, which I think is going to be a good one. So short term, but look, Peter, trying to pick timing is excruciatingly difficult.
Yeah, even for a genius like you. Let's go to...
Yeah. Like yourself, Peter.
Yeah, exactly. Well, let's go to the dividend plays. That was an area where both you and I were geniuses, if that's the plural of genius. And we got that right. But a lot of those stocks now are pretty pricey and the dividends aren't as great as they were. Do we stick with this dividend strategy or do we start looking for other companies?
In brief, we can stick with the dividend strategy, but it's just in one point that you mentioned in your introduction. The plural of geniuses is genii. Having studied Latin, I've studied Latin for about 5 years. I studied Latin for about 5 years, Peter.
Yeah.
So there you go. But
Hefo, I always find that if you actually are good at English, people don't know what you're talking about. Like genii, I think the sporting commentators of this country have passed it as geniuses. Anyway, go on.
Yeah, that's right. It's just like the indexes on the market as opposed to indices, Peter.
That's right.
But let me say, look, no, the dividend stocks are not over at all. I mean, the banks are paying dividends still around 5%, and that's fully franked. So you've got to jack it up by another 42%, especially for your super funds, Peter, who are allocated pension not paying any tax, for example. 5% becomes 7.5%. So they're still great. And people have been talking to me just today, Peter, about Telstra. What do you do with Telstra now that it's over $5? I've said in the past, put a circle around $5, but now that they're there, you say, well, what next? Well, what I say is, even if it gets to $5.60, Peter, it'll still be paying 5% fully franked, which is what the banks are now. So, look, the party's not over in my book now, and if the economy bubbles along and improves a bit, I think you're going to see even bigger advances on those major dividend stocks, Peter.
And I guess the point is this: if you are a genuine long-term investor and you buy now and you're getting that yield, as long as the company doesn't go really off the boil and they keep paying these sorts of dividends, you're still stuck with that 5 to 7.5% return, which for a long-term investor is not a bad return.
Oh, it's excellent, Peter, and that's not counting any capital growth you're getting. I mean, that's the income coming in.
Yeah.
Now, if you've got some cash, what do? You put it in a term deposit getting 3% and you might have to pay tax on it? Or do you put it in a bank or Telstra getting 5% plus and it's fully franked? They're the options that a lot of investors have got to make. And in this environment, I am much more positive about shares than I am about term deposits.
Yeah, okay.
Indeed,
but one of the important parts of your argument has to be that you believe this bull market still has a few years to run.
Oh, yeah, Peter, look, I don't get too carried away with this term bull market. I don't know whether it is a bull market, frankly. I mean, you look at the banks and, well, the banks in particular, Wesfarmers, Woolworths, and they're about where they were 5 years ago. So is that a bull market? I don't think so. I think they've got much more to go, frankly. Not at the same rate as they did last year, but I think further to go. And the whole market, Peter, if you look at that from the perspective, is it a bull market or a bear market? Well, the whole market is still, what, 25% lower than its all-time high back on the 1st of November 07. And looked at it another way, if you can invert the mathematics, Peter, we can increase 35% overall to get back to where we were. But, you know, that's looking at the thing globally. The banks are where they were 5.5 years ago, but that's not a great growth.
Yeah, now I also recall reading that, generally speaking, a stock market that collapses will keep on growing at least to pass the old high. Can you recall a time in the Aussie market's experience where it didn't pass the old high before falling again into maybe a crash or a big correction?
Well, Peter, I think we'd always hope that as time progresses that you would actually keep increasing sometime or other, not falling into a great chasm. No, I can't remember that, Peter. I think the market has always recovered from its previous highs and then lows. I can recall when I was working with the chairman of the Stock Exchange of Melbourne, Ian Roach, back in with the share market crash of '87, and he made that precise comment to a journalist at that time, and I was fairly new to the Stock Exchange at that time, and I said, oh yeah, that's right. And that is precisely what has happened, what happened then, and I think what is happening now. So we're going to pass it look, I don't want to say very soon, but in the very near term, I'd say.
Okay, small cap companies, big companies have been doing well. As a market progresses, often the neglected small caps become good. Do you have any in your eyesight at this stage?
Well, Peter, it's interesting when you talk about small caps. Now, according to the Stock Exchange, small caps are the numbers between 100 and 300 on the ASX share market indices. But if you want to concentrate on those particular stocks, I think there's quite a number. Like InvoCare, for example, which is the funeral business involved in cemeteries. You've got stocks like Super Retail Group, and you've got Flight Centre. But I'll add this, Peter. We tend to look at, say, the smaller stocks for the growth and tend to overlook some of the good ones that are the big ones that are still in front of our eyes but haven't really done, people haven't looked at them. Yeah. And here I'll mention ones linked to the share market. Now here we have stocks like AMP and the ASX, for example. Now they have not been on my favoured list very much at all in recent years. But with the growth that I see in the share market, turnover, capital raisings, I think that those two stocks in particular are going to perform well. Macquarie Bank, which is linked into that sort of business, had a great result the other day. So I think they're ones to watch as well, Peter. And there's a number of others in the internet area too that I like.
Like what?
like carsales.com, like Seek and realestate.com. Look, they've been very good performers over the last year, Peter, and I think that their fundamentals still look attractive. And if you look at that market from a top-down approach, I think how the overall real estate market's going, how cars are going, how employment in China is going for Seek, they all look good in my view. So even though a bit of a high-ish PE ratio, I'd still be looking at those ones closely.
All right, Hefo, thanks for that, mate. And as always, I hope you're right, except for a BHP in the long term. All right, mate.
Yeah, well, long term, yeah, okay, Peter, but not in the medium term.
All right, buddy. Thank you.